Every time Bitcoin crashes, the same panic hits millions of holders. If you are feeling anxious, restless, or even a little depressed while watching your Bitcoin portfolio bleed right now, you are not weak or stupid. You are just human. And by the end of this video, you will stop beating yourself for feeling this way and start understanding exactly why Bitcoin crashes trigger such emotions, and more importantly, how to handle them like a rational investor instead of panicked. The most important mental model to hold Bitcoin is called Mr. Market. The best way to understand why this Bitcoin crash is bothering you so much from one of the most powerful mental models in investing, created by Benjamin Graham, the man Warren Buffett calls his teacher and the father of value investing. Imagine there is a guy named Mr. Market who runs a business. Every single day he shows up and offers to either buy your share of the business or sell you his share at a price he quotes. Mr. Market is emotionally unstable. Some days he is euphoric and offers ridiculously high prices. Other days he is depressed and offers absolutely low prices. His mood swings have nothing to do with the actual value of the business. He is just bipolar. Don't let Mr. Market's mood dictate your emotions or decisions. You can choose to do business with him only when his prices make sense and completely ignore him when it doesn't. Right now, Mr. Market is in one of his depressive episodes with Bitcoin. He's offering it at much lower prices than just a few weeks ago. He's screaming fear, uncertainty, and panic throughout the price charts and headlines and social media. And because you're human, his mood is affecting you. That's exactly why this crash feels so bothersome. The painful part is not just watching the number go down, it's that Mr. Market is trying to infect you with his depression. He wants you to believe this time it is different, Bitcoin is finished, or you should sell before it goes to zero. This is the same market who was euphoric when Bitcoin hit 126K and made people feel invincible. Now he is at the opposite extreme. You should never take your emotional cues from the Mr. Market. Instead, you should calmly reevaluate whether his offered price is reasonable compared to the long-term value of the asset. Most people fail here with Bitcoin. They become happy when Mr. Market is happy. They become depressed when Mr. Market is depressed. The intelligent investor does the opposite. If Bitcoin is crashing this hard, something must be seriously wrong, and I should sell or at least stop buying. This feeling is logical, it feels responsible, it feels like self-protection. Your brain is telling you that the pain you are feeling is a signal of real danger. So you should take action to make the pain stop. But this is exactly where Mr. Market traps most investors. The new belief you need to adopt is this: the pain I am feeling right now isn't a warning sign to sell, it's Mr. Market's trying to make me do something stupid. Mr. Market is in one of the depressive moods and he wants me to panic, sell, or freeze. My job is to recognize that the emotional pain is not market's wisdom, it is just Mr. Market's manipulation. Mr. Market is there to serve you, not to guide you. Now let's look at the data from the history to serve as an evidence. Bitcoin has gone through multiple 50 to 80% drawdowns in its history, and every single time it has recovered and gone on to make a new all-time high. The current 2026 is no different, and it's another significant drawdown of 50%. And in 2015, 2018, the drawdowns were 70%, 80%, or sometimes even 85% also. This is a normal behavior for Bitcoin. It's not a bug, it's a feature. So how smart investors judge the prices is something that we need to learn. How do you know if the current price is actually reasonable instead of Mr. Market just being emotional? Here are the 3 practical tools smart Bitcoin investors use. The first tool is a 200 weekly moving average. This has been one of the strongest long-term support levels in the Bitcoin history. Even the worst bear markets, Bitcoin has rarely stayed below 200-week moving average for long. When the price is significantly above it, we usually are in euphoria. When it touches or goes below it, we are often in or near a value zone. Second tool is the Mayer multiple. This indicator compares Bitcoin's current prices to its 200-day moving average historically. Right now, we are moving closer to the levels that have previously offered strong long-term entry points. This Mayer multiple is trading around 1 or even sometimes below 1. Third tool that Bitcoin investors who are sophisticated uses, it's the value zone concept. Instead of trying the absolute bottom, many disciplined investors buy in stages when Bitcoin is trading in historically undervalued territory, typically 40% to 70% drawdown from cycle highs, near or below the 200-week moving average. While these tools don't exactly tell you when the bottom is, they simply tell you whether Mr. Market is offering you Bitcoin at a price that has been attractive in the past, or whether he's trying to scare you during one of its tantrums. Big drawdowns are painful, but they are also when Mr. Market often gives you the best prices. If you can stay calm and think independently of his mood, you will win. There are many common objections also that I hear. The number one objection is, what if Bitcoin crashes even harder from here? It is possible. Bitcoin has dropped more than 70% multiple times before. But remember, the crash is Mr. Market's mode, not the fundamental story. The real risk isn't the drawdown. The real risk is selling or stopping your plan because of the emotional pain. The second objection is, what if I am wrong about Bitcoin? Then you were wrong about it with a properly sized allocation, not your entire financial future. The intelligent investor never bets everything on one outcome. They take positions when, even if they are wrong, they don't get destroyed. And even if they are right, it meaningfully changes their life. Objection 3 is, what if I buy now and it keeps going down? Then you buy more at better prices. That's how you turn Mr. Market's depression into your advantage. But the real question is basically what role Bitcoin should play in your overall wealth plan. Once you answer that with clarity, using proper allocation, position sizing, and emotional preparation, then Mr. Market's mood swings lose their power over you. So you should stop reacting and you should start responding. If this video helped you reframe what you have been feeling right now and you want to build calm, rational Bitcoin strategies that survive crashes and bull runs, check out the details in the description below, and I will see you in the next video.